Hello traders and welcome to another video review. Today is Friday, December 20th, 2024. Let's take a look what is going on the Forex economic calendar for today. Asian session released the Japanese data. National core CPI and CPI are better than expected, 2.7% versus the 2.6% expected, and the previous level of 2.3% was breached as well. People's Bank of China loan prime rate in the same level as the last month, 3.10%, no change here. The bunch of data from the UK core retail sales and retail sales are quite mixed. The retail sales decrease from 2% to 0.5%, and on the monthly manner from minus 0.7 to 0.2% increase, however still worse than the forecast. German PPI prices are increasing from 0.2% to 0.5%, more than expected 0.3%. CBI industrial trends orders are scheduled for release at noon, and at this at the half past 2 core PCE price index data from the USA are scheduled for release. The Pensora spending data are scheduled for release at the same time, and then we got a bunch of data from Canada core retail sales and the retail sales. Both are expected to drop significantly from 0.9% to 0.2%. Michigan 1-year inflation expectations and 5-year inflation expectations, together with the consumer sentiment and the consumer expectations, are scheduled for release at 4 o'clock. Atlanta Fed GDP now is scheduled for release at 4:30, and then we got US Barker Hughes oil rig count data scheduled for release at 7 o'clock. And that's about it for today. As every Friday, the end of the trading session is usually a little bit more busy. The key event of the day, core PCE price index, is scheduled for release at 2:30. So that's about it. Let's take a look at the charts. US dollar, euro dollar is trying to bounce from the new low at 1.0344, just above the 1.0334 swing low, so it's only 10 pips away. The market is still trying to move higher after the first initial bounce from the extremely oversold conditions, and then another bounce back up from 1.0344 level. So if we zoom in, we can clearly see the market is under the bearish pressure. The first technical resistance is 0.428. The next is the supply zone located between the levels of 0.462 to 0.453. So please be aware of the fact that the market still is it's much more bearish than bullish. Bears are in control of this market. Let me just apply the trend line to this to the current situation. The local trend line might look like this. It cannot look like this because it's already a little bit too harsh. So let's just adjust it to the newest data. So this is the short-term temporary trend line. As long as the market trades below this trend line, the outlook remains bearish. The British pound, this is the gold market, the British pound. There you go, the British pound broke below the swing low already. 1.2486 was violated. Local low is 1.2474, so 10 pips breakout. The market is still below the level of 50, very, very close to the extremely oversold conditions. Let's zoom in. What do we have here? As you can see, there is very, very strong bearish pressure on the British pound these days, and it looks like the bears are not giving up whatsoever. The level of 1.2559 will now act as the technical resistance, and there you go. So this is the technical resistance. The other levels will act as the technical resistance as well. And currently, the bulls are trying to save this breakout. It's about 10 pips breakout below the swing low. However, with this kind of a momentum, it might not be that easy. The market needs another movement to the upside back above 1.2564, 1.2605 in order to be back in the, at least in the range. The test of 50 and 100 periods moving average would be welcome in that situation. However, the bearish pressure is very, very strong, and we might see new lows on the cable if the pullback or a correction is weak, is too weak to break above the technical resistance. US dollar to the Japanese yen keeps moving higher. Let me just switch to the daily time frame chart. We just broke above this technical resistance here and previous swing high 156.76. Local highs was made at 157.94, directly into the extremely overbought conditions. So the market is still under the bullish pressure. They still want to move higher. The next target is of course 162 level, the swing high from this year, and so far it still looks like the very, very strongly trending market. So outlook remains bullish. Gold market, however, let me just switch to 4-hour chart. Gold market, however, is taking a hit because we made another local low at 2,583, bounce higher towards the level of 2,605, and since then the market keeps moving lower. So right now the next target is 2,538, and this level will now be the point of the interest, level of the interest for the best. So far as I can see right now, we can get rid of this level. As far as I can see, the market is again below this short-term trend line resistance. So any breakout to the upside might happen only after this breakout is trend line is clearly violated. The local technical resistance, well, it looks like there is one level which suits better for the resistance here and was tested already. It's none of this one because they were violated. I think this is the closest one for the resistance, 2,632. Outlook for the gold remains bearish. And finally, cryptocurrency. As you can see on a daily time frame chart, we have an extension of the downward movement. Moreover, it was in 5 waves: 1, 2, 3, 4, and 5. So from the extremely overbought to extremely oversold, correction has been taking place. However, this correction hasn't been completed just yet, and we should prepare for another movement to the downside. Why? Because this correction was made in form of the 5 waves. So let's say this is a zigzag 5-3-5 correction. So something like this should happen, or maybe even over the weekend. The overall range of the correction now is now minus 11%, almost 12%. So this correction, the previous correction, is still a little bit bigger, about 1.2% bigger than the newest correction. However, that one is clearly corrective in nature. So I mean, this is the impulse, but it looks like there won't be any impulsive decrease, bigger impulsive decrease of a bigger degree to the downside just yet. I just think that this might be a zigzag correction in form of the ABC 535, which is why we got the 5 wave movement to the downside. So let me just stick with that. Unless we are invalidated, then we will stick to the way worse scenario, which will be of course the scenario of the new trend to the downside. However, it's for now it's just very low probability alternative cycle, alternative scenario. If we get towards the level of 90, let's say $91,072, the whole price range of the correction would be minus 16%, and that's the biggest one we got in the the whole structure to the upside, the whole impulsive structure. So that would mean we have finished the impulsive correction on a bigger time frame. Now we're entering the corrective cycle on the Bitcoin. Currently, some kind of a bounce is expected as the wave A is now completed at the level of 95,000. Low is 95,681. Some kind of a bounce is expected, possibly even towards the supply zone, and then the wave C should be done. Please notice the fact that ABC is the typical simple corrective pattern, and this pattern might evolve into more complex and time-consuming correction. For now, the level of 100,008 is now the all-time high and the swing high and the technical resistance, and it will stay there until it is broken, violated, tested, or something like this. You know what I mean. So now is the time for the little bounce from the extremely oversold conditions. The first level is there is, let me just switch it to the red level. 99,280 is the next intraday technical resistance. The other one would be somewhere around 102,758, and then of course the supply zone located as usual between those two levels. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.